Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Rahul Sharma. He's the president and co-CEO of Indxx. We're going to discuss why short-term volatility should not distract investors from the longer-term opportunities in the metaverse. It is great to see you again. Welcome back to Trade Talks, Rahul.
Thanks for having me.
Standing down, big tech has been investing a lot of money in these technologies associated with metaverse. Tell us about short-term volatility and why you see longer-term opportunity.
Well, I think we should start with understanding why these companies were and remain so interested in the metaverse. It's because people expect the metaverse to transform our daily lives. And also importantly for these types of companies that are seeking a good rate of return, to grow at between 40 to 50% per year between now and 2030. So the metaverse really could be a multi-trillion-dollar revenue opportunity. And that's why you see companies like Facebook, now Meta, Sony, Roblox, and others pumping a lot of money into the metaverse. Now, what's changed over the last year and a half or two is obviously economic conditions, headwinds. So what a lot of these companies are doing in the short term is they're trimming back on their spending and they're focusing on their core businesses. So a good example of that would be Meta. They've announced layoffs for the first time in their history, about 11,000 people, and they've realized that they cannot continue to spend billions of dollars without seeing a lot of return in their Reality Labs division. So what they're doing is they're focusing more on their ad group and on revenue in the short term. It's not to say that Mark Zuckerberg doesn't believe in the metaverse. He's obviously changed the name for a reason. It's just that the short-term focus needs to be on profitability and on their business models.
It seems to be that's all we're talking about this year, though. Metaverse, Web3, AI, of course, ChatGPT. It seems to be the buzzwords. It's all everyone's talking about in the marketplace.
Yeah, and it's interesting because a lot of times people only start talking about these things once they burst out into the open. So AI has been revolutionizing sectors and industries for many, many years. But it's only now with ChatGPT that people are realizing how advanced AI has become, how revolutionary and how much change it can affect throughout the global ecosystem. And a lot of companies now are realizing what a big threat it is to their business models, Google being one of them.
Right, right. So what are the opportunities that are in front of us right now? Because there are companies, in fact, that are deploying some of these technologies associated with it.
Well, there's a couple of areas. I think from a company-specific perspective, when we look at our metaverse index here in the US, you have companies like Roblox that are seeing good growth. They're seeing double-digit growth in daily active users. They're putting a lot of money into their products. You have companies like Epic that have raised over $2 billion to focus and build their own metaverse platform. That's done very well. And you also see other companies like Sony on the actual hardware side working and improving their product. They've just come out with a new headset, very well received. And it still is large. We're still, of course, in the early stages. But what I always like to say as an example is I remember going to the Sony boutique here on Fifth Avenue and seeing their first OLED TV. It came out in 2007, and I was amazed by it, but it was 11 inches, and it cost $2,500. And you realize how quickly technological change happens when you think for a lot of us that was really a blink of an eye ago, and now here we are with 65-inch OLEDs that are significantly smaller and lighter that we could buy for even less money. So there's a huge amount of money that's coming into the space still. Not only on the public side, but our research has shown on the private side, billions of dollars is flowing into what we call the scaffolding around the metaverse. So developers, architects, coders, people who are doing the hard work behind the scenes to continue to ensure that the metaverse grows and succeeds. So big picture, we look at the metaverse just like we look at AI, cloud computing, the internet, where you have these initial phases of euphoria that die down, but the hard work behind the scenes doesn't stop. And then the public, again, sometime in the future, who knows, a year, 2 years, 5 years, something will burst out into the open and the public will realize, wow, look at how much work has actually happened over the last few years.
What are some of the concerns or risks around the metaverse that you're hearing or trying to tackle those problems?
Yeah, look, it's still early stages. People don't know how things are going to turn out. There's talk between closed metaverse systems that are controlled by companies versus open metaverse systems, which are more kind of open architecture and free to use by a lot of people. A lot of these things still need to work their way out. And as we saw in the past with the internet, you're going to have winners and you're going to have losers. There's probably going to be more losers than winners. But at the end of the day, the good thing that I think people should take away from this is not focus on the short term, but do what we do as an index provider when we build an index. Focus on big picture, what we know is going to happen in terms of overall growth and transformational change to the way we interact with reality.
All right, appreciate the insight as always. Thanks for joining us on Trade Talks, Rahul. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.